Hello and welcome to the Franchise Everything podcast, where we talk about everything and anything franchise. We're actually coming to you this time from the National and Franchise Convention held by the FCA on the Gold Coast. And you can hear a bit of the noise in the background. I'm joined once again by a person we've had on before, know very well, Darryn McAuliffe. Welcome, Darryn.
Thanks, Glenn. Great to be back.
Pleasure, mate. Thank you for joining us again. We've chatted quite a few times like this, haven't we?
Yeah, indeed. Plenty to talk about.
Yeah, excellent, always. And we're talking about franchise finance this time. So we talk about, you do a number of things in the marketplace with regard to franchising and data in the Australian marketplace. Franchise finance. Now, in particular, I suppose the first thing is franchise finance. Is it a challenge? Is it a challenge for people trying to buy a franchise right now as far as finance is concerned?
Yeah, franchise finance is certainly a challenge, Glenn. It's been a recurring theme for decades. People find it hard to find good franchisees, and then so critical to actually get those franchisees financed, because most need it in reality. So it's a challenge. Banks move around a bit, who's in and who's the most active. So sometimes franchisors are, find it hard to know just who's hot at a particular point of time.
As far as which bank is hot?
Yeah, because they move. They're dislocated and inconsistent.
And that's an appetite for lending that you're talking about?
Yeah. So at a different point of time, certain banks says we really want to ramp up our franchise lending exposure, and then other times certain banks will pull back.
So why is that? Why do they do it?
Look, they tend to pull back because there's been perhaps a bad experience. A brand or a couple of brands have let them down. They think, well, perhaps we pass on this risk for the time being. Sometimes their franchise book has grown really strongly, and they say we're just taking a breather to kind of let it reweight with other parts of their portfolio. In terms of wanting to grow it, what we're experiencing right now is lenders looking at their portfolio and saying, look, the franchise portfolio is actually in pretty good shape. We've had a lot of proof points, good brands doing good things. We'd like to lend a bit more money to this space because it's proving a pretty good risk. So they're saying we want to take more brands on.
And what do they do in that regard at that time when they make that decision at whatever level they make it? What's their next step?
Well, they've got the age-old problem of 1,100 franchise brands. Which ones are good to deal with? Because they're not all. Many of them are good. Some of them are really good. So their starting point is to try and just look for those that actually will be a good business relationship for them. Those that are their franchisees are performing well. Those that the system supports the franchisees well in the occasion they're not. And those franchisors that give the lenders good information have really got a partnership approach, not just after a particular bank for a particular transaction, then keep moving, really looking for a long-term association and partnership.
Okay, so in getting this finance happening, so franchising finance is a bit of a challenge at times, depending on who you are. Is that what you're saying, depending on the position of the brand?
Yes, some brands find it easier than others, but most brands are still trying to build those relationships and trying to get it. There's a few core brands that have had very long-standing good relationships, and they've got decades of data with a particular bank that makes them very good risk profile. But the majority of the sector is actually looking for more opportunities and more options for their franchisees to get finance.
So how do they improve that? What's the process? Because I know you do a bunch of stuff in this space. How do you do it? Yeah,
we've got a few things we do, but I just high level first. The first thing a franchisor needs to do is give the lenders better information. Put language and information they understand and trust.
And that's your common line. Every time I speak to you, you're pretty much talking about franchisors.
Because it doesn't change, Glenn, and I'm not convinced the message gets through to franchisors that are critical of banks not providing enough finance, or they find it frustrating. But the reality is so many franchise brands just either don't know how to or won't provide the information they need. So, I'll keep saying this every time we talk. Better information is what they want. Right? That's the first thing.
Yep. And just to dig a bit deeper on that, why do you think it is? What the lack of not
why don't
enough
they give better information?
Yeah, why don't they?
To be honest, I don't think franchisors understand the lender's business, right? We've spoken about that before as well. They think because they've got 40, 50 outlets and the brand's becoming well known, they think they're a good risk profile. But lenders actually think, well, there's 50 times the risk, not 50 times the opportunity sometimes. So until they know that it's a good risk, it effectively remains a risk they don't want to be part of. So they don't know the franchisors how the lenders think. They don't know what information they need to assess whether they're a good risk, and then they don't give it to them, or they give it to them in a bad format.
So what's the next step then? You're talking about the actions that they take to do that. So what is their next progress from there to actually improve that?
So look, there are some brands that are well schooled and give good information packs, but there are quite a few brands that give information packs that actually aren't that meaningful. They show very much cosmetic things that actually don't hit what the lenders really need.
So just like a franchise information brochure?
Yeah, information brochures and give them updates and the new uniforms and new menu items, but it doesn't really address the underlying risks. But we've got something that we've been doing for a lot of brands recently. It's called a franchise underwriting report. A key part of that, or the one thing that matters most, is there's a score at the end of it. So franchise systems get a score. 950 is the maximum. I've never seen anywhere near that yet. But they get a score, and once that score gives the lender an independent input and some guidance as to what an external party that's been around franchising for decades now, actually what we think their default risk is.
So the bank then has a score what they think the default risk is.
Yeah, and look, it's not a valuation, but if you think of someone lending on a property,
Yep.
They want to make sure that person can pay back the loan, but they're interested in what that property is actually worth. So if a respected independent person gives an opinion as to the value of that property, that is a big comfort for a lender, and that's what this is. This is a score. Which comes from a pretty extensive diligence on the actual franchise system. And it's fairly new in Australia, Glenn. It's been going 3 or 4 years here. There's probably 30-odd brands have got them now. But in the US, 600 brands are using these, right? And this is not something that is just being created overnight here. This is decades of interpreting franchise data, decades of actually looking at the performance, looking at loan loss rates, and actually building the algorithms that actually drop the score out.
So it's really sort of lifting the veil on it, isn't it? There's no smoke and mirrors associated with it. It's a raw number showing you exactly what you're
spot on. So you know that our broader business is US based, and in the US they've got about 40 banks. They got a lot more banks than us here, of course. But 40 banks actually subscribe to this, and their lenders don't write transactions without them because it's an independent risk input, and they use it to decide who goes on their lending panels.
Do you see that heading that way in Australia?
Yeah, so it's progressing. Well, there's one major bank at the moment that is almost insisting on it, or certainly it's using that to put brands up the top of the queue that are looking for franchise finance. There are a couple of other banks that certainly are looking for it, so they welcome it. Look, there's a couple of things here. Firstly, it's an independent risk input. Secondly, it actually saves the lenders a lot of work, right? Because we've actually done the assessment. They'll do their own assessment of credit risk, but in terms of getting the source documents, coming up with those key numbers, it tells them straight up what an expert franchise finance actually looks at.
So have you done some for some brands and have had a nasty surprise, and the brands have been really surprised about just how they rank? Because I can imagine there might be a few surprises for people here. Sounds like there's a few assumptions made in the marketplace about brands' worthiness for lending, is from what you seem to be.
Well, I would actually say more brands here have been pleasantly surprised by their score, because lenders and FRANdata and anyone that's been around the sector for a long time knows that everything's not perfect in any system. What everyone cares about is that the chances of performance are high because of the systems and disciplines and execution of a particular brand. So when we're reviewing a franchise system, we get 5 years disclosure documents, a couple of years franchisor financials, deep understanding of how they're supporting franchisees, what the early warning signs are, what average financial performance looks like. So it's a fair bit of information. Then we make the assessment on what their score is from that. It drops out of a model, so it's not subjective. But franchise systems are often pleasantly surprised, because if they're doing it right and they've got disciplined growth and the franchisor's in reasonable financial shape, and most of their franchisees are doing okay financially, certainly meeting their expectations, they give them good support and they're on top of the early warning signs, they score pretty well. So it's actually, there are a couple of brands that have actually asked us to do it, and they've taken the feedback to say, we're weak in what areas, why is that? And they say, well, let's come back and revisit that in 3 months or 12 months when we've addressed those things. Yeah.
So do those reports get used in the interim by lending institutions, or they just hold them back?
Yeah, 100%. Like all of our products, the franchisor controls the distribution of it.
Okay.
So there are quite a few poor ratings around. They haven't yet been to the market because the franchisor hasn't authorised its release.
Okay. All right. So what's important in this? Let's start with a couple. So the franchisee looking for a business, what's the key takeaway in this for franchisees looking to get finance for their business?
So a level above this is a franchisee should actually ask their franchisor, are you finance ready? And you would hope that the franchisor would say, yes, we've got multiple relationships. We've got the finance ready tick from FRANdata. We've provided independent reports and assessments that make the lenders want to do business with us. That's really all the franchisee needs to know. They're finance ready.
Okay. And franchisor. So what's a key takeaway from this for a franchisor, whether it be a call to action or something you really want them to take away from listening to this or watching this, and what they take out of it?
So if you're a franchisor and access to finance is a challenge, or you want better access to finance, if you're trying to grow your system or you're trying to cover attrition, which is very serious for mature age franchises, then you should actually get on the front foot and give the lenders the information that they need and want. So I'm telling you right now that the underwriting report is the most meaningful change to the franchise lending landscape. We call it groundbreaking because we know it's opened up access to finance for a lot of brands. So if you're a franchisor, my advice is get on the front foot, give the lenders the information that they want, give it to them in the language they understand and trust, not what you'd like to show them or what you think they might want. Actually ask them what they want, or ask someone perhaps like us who's used to giving them what they want, whose business depends on satisfying the lender's needs, what you can do to actually promote improved finance access for your franchisees.
And of course, that'll help your growth.
It helps the brands grow, yeah.
Yeah. And I think one thing that we've talked about in many years, you and I have talked about in interviews of all different types, whether it be video, article, or whatever it may be, is franchisor relationships with banks. And that's a key part to that, isn't it? Building that relationship. This all fits into it, doesn't it?
100%. If you provide lenders with good information and you approach them respectfully and you make efforts to understand their business, and if you know or if you believe that the lenders welcome the independent reports like FRANdata is doing, if you don't believe it, that's a separate issue. But if you believe it or you do your research and it confirms what you thought, then when you give them that good information, it actually does two things. A, it helps them with their credit assessment. And B, it really signals that partnership intent. And lenders, they thrive on long-term relationships with all their customers. Franchising is no different. A franchise system that is giving them good information, wants to have a partnership, they are the systems that lenders are going to gravitate towards. That's the key.
That's the key to it. Excellent. Well, Darryn, we've covered the topics again, as always. Thanks for joining us again on the Franchise Everything podcast.
Thanks, Glenn. It's great to be involved in these topics, which they don't go away.
No, they don't.
But they are improving for some, so we appreciate that.
Excellent. And I hope it wasn't too noisy in the background because there's certainly a lot happening around here, isn't there?
Well, it's a busy time. With the franchise convention, there's a lot of franchisors here and a lot of the broader franchise community. So
there's a lot of people snacking, having coffee all around us.
Yeah.
If you can't see the other side of the screen if you're watching this at home, but there's plenty happening around. So, mate, thanks for sitting through it and giving us all that information.
Thanks, Glenn. Thanks, Franchise Buyer. Thank you.